The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Tell Us Why, a podcast for the financial freedom community. If you're looking to succeed in your quest for financial freedom, make sure you join us every week as we, along with our guests, discuss different stories of success, how they were achieved, and how you can do the same. And of course, we ask them to tell us why. Here are your hosts, Jack and Mike.
Welcome to the Tell Us Why podcast. I'm your host, Jack Dalrymple, here alongside my co-host, Mr. Michael Ketchen. Today we will be discussing Airbnb investing as another edition of the Financial Freedom Series here on the Tell Us Why podcast. While Airbnb is a publicly listed company, we will not be talking about IPOs, market caps, PE ratios, or anything related to the stock market.
Is that a legal disclaimer so we don't go to jail?
Yeah.
Okay, I like that. Everything he said.
That's not what we're referring to when we say Airbnb investing.
Okay.
But before we dive into that, Mike, what's going on with the business?
Everything's good. As I mentioned, we own a couple of Airbnbs. We're looking at a couple more opportunities. And we also hosted our second Tell Us Why webinar on luxury Airbnb investing, which was great. Shout out to everyone who signed up, sold out. Unbelievable content. And I think if you sign up,
I learned a lot on that one. Thank you for that.
Well, thank you. Thank you for being there. Make sure you check out the Facebook group for Tell Us Why or follow us on Instagram. We're actually going to be sharing a link to those who missed out on the webinar. So make sure you see us there. What do you got going on in your business, Jack?
A couple of refis in progress. More than one. Actually refining one of the apartments. I think I mentioned that a couple weeks ago. But in addition, I'm going to refi my house that I live in.
Got her on board, huh?
Pull some equity out of that so I can load up on reserves and move quickly on to the next one.
I like it. Making that cheap debt work for you. That's awesome. I'm so excited to get into today. It's a great topic.
Me too.
And before we dive in, though, should we hear who today's episode is brought by?
Let's do it.
All right.
Are you sick of being treated like just another number by large insurance companies? Do you want a more personalized experience with somebody that you can trust? With Keith Monteith, that's exactly what you'll get. Keith is an experienced professional who can design an insurance plan tailored to fit your specific needs. With access to over 30 insurance carriers, Keith is able to shop numerous markets to find a price that works for you. So if you want an insurance agent that you can rely on and one that has your best interests at heart, then call or text Keith today on 978-241-2363. That's 978-241-2363. Keith Monty. He'll get you covered.
Okay, so Airbnb, ticker symbol ABNB, 52-week high sitting at $219. No, I'm just kidding.
Yeah, say easy there, State Street.
Easy.
Hey, let's remember what we're doing here.
I think we're all familiar with Airbnb, but for those who are not, Airbnb is what? A marketplace for lodging, vacation rentals,
second homes, house hacks,
tourist activities, stuff like that. But today, when we say Airbnb, we're referencing short-term rentals, medium-term rentals too, right?
Yeah.
But we'll dig into that. VRBO, same thing.
VRBO, Booking.com, they're out there. There's other competitors, but it's kind of like brand association. I feel like Airbnb's kind of taken off. And one thing that we're going to get into, one of the reasons we're talking about this as it's part of the Financial Freedom Series, is the opportunity that's out there. And we talked about this on the webinar. It's kind of unique in the sense that second homes, vacation homes, seasonal rentals, it's not a new field. It's not a new area to invest in relatively. But the idea of technology, and in particular, Airbnb and the brand that's gone with it, is still new. And I don't know of too many other things in terms of investing and wealth creation in the field of real estate that are really new. I mean, do you know anything else that's a decade old? Can you think of?
No. I mean, Airbnb was created in 2008, right?
I think so, 8 or 9, yeah. So you're talking about a decade.
At that during the webinar the other night, somebody asked how old it was. Yeah, Jake.
Yeah, shout out to Jake. Live studio audience.
Audience.
Executive producer extraordinaire. So where we're going with that is whenever something's relatively new.
My mom's here too.
So
this place is packed.
Miss Bennett, congratulations. Thank you for being here and giving us Jack. So focusing on this evergreen episode.
Screw you, Chrissy.
We are going to go through this, and we're just having too much fun already. So reining it back in, looking at this, where I was going with that, and I said it on the webinar, I think it's important to know, when something's 10 years old, it sounds like a lot, but it's really relatively not.
Yeah.
So it's going to create inefficiencies, which are going to create opportunity. And I think we're seeing that right now in terms of the housing shortage and other things. But why in particular do you think, if you're someone who's just getting started down this path of financial freedom, down this path of investing, I mean, they're even crowdfunding Airbnbs now, which is crazy. But why do you think this is a good opportunity for someone to dive into if they're just getting started?
Well, I mean, it's just such an, I think going back to I felt like it was a relatively new phenomenon. Like, I mean, 10 years old, 13 years old, whatever, like it still feels very new to me. And I think the return, I mean, for me, it's the returns are the reason that I want to get into it. Like, that's one of my higher priorities now. I've thought about it for years. You've been doing it for years. So just listening to you go through it, your systems, your return metrics, all of that, the higher returns are fantastic. Yep. When I could make $2,000 on a rental property in my town via traditional long-term 12-month rental versus making, I looked it up the other night when you were mentioning AirDNA, and I think it's like 7,500 is the average. And I was like, I mean, that's unbelievable.
It is.
Rent it for 2 or 3 months out of the year, and then you don't have to worry about anything. I mean, granted, I live in a beach community, but like you could still rent it out.
Well,
for a short-term rental in the off months, or even a medium-term rental to traveling nurses or something to that effect. So,
and on that point, even as you just said, the thing we were trying to emphasize the other night is, we were focused on luxury Airbnbs. However, from an entry point, it's so creative in the sense that, like, think back to an earlier part of this series. Is your house an asset or a liability? And we said it really depends, right? It's real simple. To quote, the godfather of all this, Robert Kiyosaki, an asset is something that puts money in your pocket. A liability is something that takes it out of your pocket. So what I like about Airbnb from the standpoint of, do you have that finished basement? Do you have that unit above the garage? Do you have an extra bedroom? The guy on my own street, he rents out a bedroom each month for $1,000 a month, which just blows my mind.
Oh, really?
You can transform a liability into an asset from an entry level. So zooming out real quick, some higher level stuff we've touched on. You're leveraging an FHA loan for 3.5% down, so not a lot of capital to get started, with the intention of adding that accessory dwelling unit. Now you compound that by going on a short-term rental rate, and you're really off and running.
Yeah.
And now imagine being able to replace your entire monthly your entire debt service on that asset using this relatively new platform, and on top of which, there's far fewer competition for these things than there is in the multifamily, the self-storage, the industrial space. That's what kills me.
Well, let me ask you this question, because you've actually done it. You've been there. You've gone through it. Yep. So, for example, one of the properties in wherever you want.
Yep.
What would you say the multiple of return is on via Airbnb versus if you were to do a traditional 12-month long-term lease?
It really depends. It depends on what you're doing, but it can be as high as 12 times. I mean, I'll use one of them we have in Maine, in Kennebunkport, Maine. The market rent for a house that size is $2,500 a month, call it, maybe $3,000, so call it $2,500. So you're talking $30,000 in revenue. That house did $150,000 in revenue this year. So what do you at, a 5x multiple on a luxury house, on $1 million asset?
Yeah.
And we're talking about the one in Bozeman, Montana, that the monthly rent is $3,500. It might bring in $225,000 given the size and the location.
Yeah.
You're almost at a 10x multiple.
Yeah.
You can't, from a risk versus reward standpoint, which I know we're going to get to the risk, because it's not all, everything else, it is investing. It's not speculating. It's not sitting on the sidelines. There is risk. It kind of goes to it, and you can't overlook that either.
Yeah. So I guess there's a higher return. Is there a higher risk?
I guess it really depends. And I think I tell everybody, obviously, do your own research. Some of the potential risks, we are talking about, second homes. We're talking about seasonality markets. In a down cycle, historically, people travel less. I will play devil's advocate like I did in the webinar the other night. We're in this kind of, in my opinion, unknown territory. And I think anyone who tells you they do know is full of shit, honestly.
Yeah.
We've never had the ability to have remote work. We've never had the ability to travel with a laptop. So yes, predominantly previously before, if it me in the luxury house and, people aren't traveling because it's, discretionary spending's down, the economy's retracting. However, At the same time, now with the ability to remote work, and this is what we talked about, if I can go work throughout the country and travel, well, I'm still getting paid. So it's just opening all these opportunities where there is risk. I just don't know if it's the same. I mean, I said on the webinar, COVID, the first quarter was the worst GDP retraction in the history of the United States. It's a fact. We said it. Math doesn't lie. People do. They don't want you to know that, but it's a fact. It's an accurate statement. No Airbnbs that I own and that a lot of successful operators own were really affected. If you were buying thin, if you were buying wrong, if you weren't actually running the numbers and you just thought this was easy, you weren't investing, you were just buying, you got hurt. But you would get hurt in any asset class. You get hurt in any market. There's good operators, there's bad operators. So I don't know if there's more risk on that front.
That is an interesting dynamic, though, the COVID effect on Airbnb, because you have mitigated that risk factor where people can work from anywhere now. So if they get laid off, granted, that's a risk. But if the fact that they can still travel throughout the world and continue to do their day job, that's
we're so connected.
somewhat interesting.
And you said something earlier that the CEO of Airbnb came out about 9 months ago. And he said he wants Airbnb to become the biggest landlord in the world. I believe was the quote. Don't double check that. But essentially, he sees the opportunity where they can essentially replace a lot of traditional multifamily and housing. And that made me pause and go, okay, that's not how I think of Airbnb's model. So let me evaluate that. How does the guy who's the visionary, how's the guy who's created the company, who's driving the bus, how does he evaluate this? So when you take a step back, and now like you just said, you start to think of it, right? It's all about consumerism. America's built on consumerism. You understand consumer behavior, you start to understand wealth creation. What do consumers want? Why do we include all utilities in our rentals? They don't care what it costs. They want comfort. They want ease. You understand consumer behavior. I want amenities. I want a fully furnished. I want a cleaner to come clean. I want someone to pick up my laundry and do my laundry. People pay a premium. That's consumer behavior. And Airbnb directly plays into consumer behavior a lot more than a traditional rental. And now you start thinking about the spread, the return, the scale, and you kind of step back. You go, wow. And that's kind of where I think there's real opportunity.
Yep, I like it. One of the things that I've always been hesitant about, I remember like in just a market example, in 2016, I was like, oh, the market's going to turn, pulled all my money out of the stock market, not real estate market, and then severely miss out on significant opportunities. But and then like 2018, getting into real estate investing, I was like, oh, Airbnb is riskier, so I'm going to not buy an Airbnb. And I mean, prices have skyrocketed since 2018. First of all, I could have been making a lot more money. Second of all, I could have made some icing on the cake with appreciation.
Can we jump in right there real quick? And that's very important, what Jack just acknowledged. And I want you to replay your process as you're going through this entire series and what we're trying to do here. Was it riskier in reality, or was it riskier because you didn't have a system in place to do the research to properly evaluate the risk?
Yeah, I guess so.
Right?
Yeah.
Because you just said you would have been in a better place.
Yep.
And we do this all the time. So try to be cognizant of the fact that when you're looking at something, is your information accurate? Are you making the best informed decision you can? Right? Because if the information is not accurate and you're not that informed, that can directly impact your return. So through that lens, it is. Now with these tools and technology, back to why I think there's real opportunity. Sites like airdna.com, I mentioned it before, when you get a VRBO listing, the reports they give you, I mean, you know what, maybe we'll share them in the show notes. I don't know if Chrissy can attach one. I'll see if people can get that. The level of minutia it goes to, it's unbelievable.
Yeah,
and it's actual data.
I want to read one of those.
You know what I mean?
You mentioned it the other day on the
Yeah.
webinar.
So,
I'd like to take a look.
So real quick, let's blast through. What are some of the other advantages of this?
Well, actually, you're talking about systems. I would like to dig into that for a second. So, like in terms of property management, what kind of systems are you using? Because I remember when I first, again, got into real estate, one of the issues that I had, again, wasn't smart enough to do it on my own or smart enough to research
You're welcome.
it.
I'm really going to start charging you for this stuff.
The only system I had in terms of property management was hiring someone else. I wanted to do a destination. Didn't really think it was feasible for me to do it on my own. What do your systems look like, and what are the options, and I guess what are your systems?
There's two huge advantages with Airbnb. One's a human advantage and one's a technology advantage, in my opinion. One of them is, unlike multifamily, every other short-term rental out there has a cleaner, has a maintenance person, has a landscaper. So when you reach out, or in the example of Airbnb, you go on, you find those who are super hosts. Hey, see you're doing well. Congratulations. I'm new to the market. You shoot off one of these messages. Who's your cleaning person? Can we connect? Who's your maintenance person? Can we connect? They want to share because think about it. If you're giving them job security for their person by getting more clients, that's how you build your team. The proof is in the pudding. They tell you right on the listing who's a superhost. Message all the superhosts in the market you're thinking about going to. Even if you only get a 10, 20% response rate, they're going to give you the resources. On the technology side, now you can control your locks, your thermostats, your water leak detections, your cameras, your amenities, all from your phone remote anywhere in the world.
Yeah.
Right? Now they have apps out there, and we'll link some in the show notes, Your Porter, things like that. You can automate. We're to the point now, this year we're going to host across our 4 Airbnbs 350 stays. If we spend 2 hours of work on it a month, I'd be shocked. And it's all because it's automated. It's a lot more than that for multifamily. I promise you that. Okay?
That's really interesting.
Yep.
I thought it was a lot more input on your end.
No.
From that perspective,
But again, it's starting, like we said, it's having the system and the process to solve the problem.
Yeah.
And that's another reason we want to get into this is you can scale this and be relatively hands-off while still working a W-2 in your pursuit of financial freedom.
Yep. So what is a typical Airbnb, I guess, in your portfolio? What does vacancy look like? Is it?
Yeah, to be honest, I don't think we have any of the 4 a year round. I think we're somewhere between 95 to 99% occupancy historically.
That's crazy.
Active calendar management, being hands-on, understanding price points.
Price discrimination, like obviously
Yeah.
the summer months get higher.
Oh yeah, it goes up and down.
Months.
You know, like in Maine, for example, we do a short 3-month lease that's in there every day. It's not at the Airbnb rate. It's at literally our methodology is let's have it basically cover the debt service for those 3 months.
Yeah.
And that's all we do.
Yeah.
Montana, conversely, we use what we termed it active calendar management, smart pricing, whatever you want to call it. I told you we have our benchmarks, 120 days out, 90 days out, 60 days out, 30 days out. We're actively dropping. Yesterday was a perfect example. There's 3 or 4 days left in Maine, random days in October. So we were at 250. We just dropped it to 175. They booked. So yeah, you're losing $75, but you're also that occupancy is still going. Plus, your cleaning fee, which is another huge element, stays the same for that whole time. I feel like we're gonna have to do a part 2 on this.
Yeah,
I think maybe we should save some of this
so.
for part 2.
Yeah.
For part 2 Airbnb. What do you think?
Sure, you can do that.
All right. So with that, I believe we had a great quote of the week. Correct?
Sure, we do.
Who was it brought to us by?
Brought to us by what?
Who brought us the quote?
Quote?
Who said it?
The quote or the question of the week?
The question of the week. Why am I saying quote of the week? I'm messing
me
up.
up here. All right, so Cameron Cox asked, how much of a nightly rate does Airbnb make off you/your guests? Cameron, we will get you some Tell Us Why swag. I'm actually not rocking it today for like the first episode.
Yeah, that's okay.
But Cameron will reach out and get you.
Jack just letting the people
Sure.
down.
Something good.
Airbnb and VRBO, we do it a little different. Airbnb charges a percentage. I couldn't tell you the exact percentage. They make out quite well.
Yeah.
VRBO, you can pay a once yearly fee. I think it's like $400 or $500, and then they charge the guest a fee. Because that's what you got to remember. They're getting both sides.
Double dipping.
And they're doing quite well, which is why I think at some point, you want my bold prediction, another operator is going to enter this space. And there's a lot of inefficiencies. As someone who owns these, there's a ton of inefficiencies that could be cleaned up. All right.
Moving on. Kind of wrap it up here.
Yeah, I think so. I think we'll definitely come back with a part 2. But where can people connect with us in the meantime?
You can find us on Instagram, YouTube,
LinkedIn,
Facebook,
Twitter.
LinkedIn, Twitter, everything.
Everywhere
We're
there's social
everywhere.
media.
We're not on TikTok.
No, we should be on TikTok.
We're not on TikTok.
Apparently.
Yes.
Yes.
I
We need
don't know.
TikTok.
Mike doesn't like TikTok.
We're not
Mike
going to get
doesn't
into
like a lot of
We're not going to get into that on air.
Yeah.
We're doing reels now.
All the links are in the description below. And if you're listening for the first time, head over to our YouTube channel and subscribe.
And even better, if you want to come check us out live in person, we record most Wednesdays in Salem, New Hampshire at the Studio 21 Podcast Cafe.
Wrap it up with the quote of the week. Airbnb was never meant to be the big idea. It was meant to be the thing that paid the rent so we could think of the big idea. That's Brian Chesky, CEO and co-founder of Airbnb.
And the first time Jack's ever read a quote almost successfully.
Said that last time. I can't even read.
Yes. As always.
That's it for today. So be sure to join us until next week's episode. And as always,
bet on yourself.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.